Hello and welcome to the Dukascopy TV studios in Geneva. I'm Sam Meredith and joining us once again is Mr. Bruno Estier for the technical market analysis. Bruno, good morning.
Good morning, Sam.
Now, first of all, 2 weeks ago you were warning about the rebound in equities, though what is the outlook now?
Well, we need to realize that one of the main factors currently influencing the psychology of the market is oil. We noticed after the long downtrend of oil, we were during the whole of September in a range between 49 and 43, and in October suddenly there is a big little rise from 43 to 50, opening hopes that it will continue eventually towards 60, but the hopes are dashed immediately in the last 3 days by a pullback into the old range.
Right, so how is this affecting US equities?
Of course, it is affecting the US equity, first of all, through the energy sector in the US. We have here the same closing price line of the oil coming down, at the same time the US sectors on the last 3 days is coming down. And we notice also that after this big downtrend, basically, this sector had already rebounded 50% of its big downtrend. It's a classic place where usually a rebound would stall.
It's always easy in hindsight, of course, but were we able to anticipate this decline?
Yes, I think we need to realize that, of course, the energy sector is not all of the S&P 500, but if we look at the intraday charts of the S&P 500, we notice something which was already interesting from a technical viewpoint, even without the decline of oil. Namely, the S&P as a whole was making new highs, but its momentum, its rate of change, of increase, was not making a new high. And this is called a classic bearish divergence, announcing a small correction. And that's exactly what happened. If we look at the daily charts, we notice also that around 2020 there were resistances which were acting as a ceiling. And also we noticed that on a daily basis the stochastics is overbought and announcing the top of the trading range. So we remain in this trading range 2020 to end 1970. Finally, if you look at the weekly charts, you notice the property of the cloud. The cloud is this green area made of two moving averages which are displaced, and they act when prices are above it as a floor, and when prices move below it, then the cloud will act as a ceiling. And we notice that the rebound from 1970 has just hit the top of our cloud, which is a normal place for the market to stop and start to pull back.
Okay, and is that the same story for smaller mid-caps as well?
Smaller mid-cap have been doing even worse than that. They decline a little bit, but on a relative strength, they decline more than the S&P 500. And this is, we'll see that here on the dash line, and the same thing for the mid-cap here on the dash line. Why it is bad? It is bad because usually small and mid-cap are more riskier assets than the S&P 500, which represent large cap, and therefore they should be leading out of a bottom. And the question mark is really why not this time are they not leading on the way up? So probably just because we remain in the trading range.
Okay, and if we move now then to the European equity market, how's that been reacting?
European equity market are acting the same as the S&P 500, and we see that in the sense that we have a flat relative strength line of the Euro Stoxx 50 divided by the S&P 500. And we'll see also nominally on the Euro Stoxx chart that we also hit the same resistance line within a normal trading range. So here there is no outperformance of Euro Stoxx despite what the economists are calling for.
Okay, and the situation in China?
Situation in China is relatively similar. Again, we see a flat relative strength line of the China ETF versus the S&P 500. Was moving slightly a little bit higher because emerging markets have been rebounding, but now had been clearly capped in a similar pattern with overbought stochastics. Also, we like to mention the fact that the situation is relatively similar with India. India is a darling within the emerging market, one of the best outperformer, and we see that because the relative strength of India versus the emerging market is starting to move up again. But really, against the S&P, it's the same thing. It's flat. So we are still there within the range.
Okay. And lastly for today, what about Japan?
Japan has been the only developed market moving on its own almost. We had a big correction. We see here that we have hit the bottom of the cloud and rebounded. This is a good sign. That means at least the correction down is over. Now we probably are going to move sideways, and we'll move sideways because if we look at the daily charts, we notice that there are plenty of overhead resistances around 18,700, and the market has started to stall here on the last 4 days, and even this morning it lost 1%, so it moved down 500 points. So we really need to be careful because these resistances are very active currently, and they are coming against the mainstream thinking, which suggests that from the end of October, in November, December, the S&P should move up. Here we really need to give the weight of the evidence in the charts before the seasonality.
Bruno, thank you very much.
You're welcome.
And thank you for watching. Keep clicking back to Dukascopy TV for more exclusive interviews and updates. We'll see you next time.